Today, I want to talk about the Japan interest rate shift. So, right in January this year, the Bank of Japan made a historic policy shift by raising its short-term interest rate to 0.5%, marking the highest level in 17 years and signaling a definitive departure from the nation's long-standing ultra-loose monetary stance. Now, for decades, Japan maintained near zero or even negative interest rates in an effort to combat deflation and stimulate economic growth. This move, therefore, represents a significant turning point not only for domestic monetary policy but also for the trajectory of the Japanese yen. Now, the catalyst behind this rate hike lies in rising domestic inflation, driven primarily by increased wages and elevated food prices. Now, Japan's once plagued by stagnant prices and weak demand is now facing a robust upward shift in inflationary pressures. Now, after years of undershooting its inflation target, the Bank of Japan is finally seeing inflation hold steady above 2%, creating the monetary room and necessity for policy normalizations. Now, a key development fueling inflation is wage growth. Japan's largest labor union, Wrangle, announced that its member unions secured an average 5.46% wage increase for the fiscal year beginning in April 2025. This wage hike surpasses last year's 5.1% increase and is the largest since 1991, reinforcing expectations of a wage price spiral that could sustain inflation for longer. The minutes from the BOJ's January 2025 meeting, released just yesterday, provided deeper insights into the central bank's thinking. Governor Kazuo Ueda and other policymakers acknowledged that while inflation is trending upwards, the BOJ would proceed gradually with any future rate hikes. The strategy is to avoid disrupting Japan's fragile economic recovery or triggering adverse reaction in financial markets. The minutes also underscored the BOJ's awareness of external risks, such as the possibility of new US tariff, financial instability in global markets, and uneven growth across major economies. These factors are seen as potential constraint on the pace and timing of future rate adjustments. Okay. Now, so what's the immediate outlook so far? So in theory, high interest rates tend to strengthen a country's currency. This is because they offer investors high returns on interest rate-bearing assets denominated in that currency. However, the situation in Japan is more nuanced. While the BOJ has begun tightening, Japan's 0.5% rate remains far below those in other advanced economies. For instance, the US Federal Reserve and Bank of England have maintained interest rates well above the 4% mark, making dollar and pound denominated assets significantly more attractive to global investors in the short term. As a result, capital inflows into Japan remain limited and the yen has yet to see a meaningful surge in value. So in the medium to long term, we see a gradual yen appreciation being possible. Looking ahead, however, the yen's trajectory could shift if Japan's inflation continues to stay above the 2% target and the BOJ maintains its tightening cycle, even at a measured pace. Foreign capital could begin flowing back into Japanese assets. This would slowly increase demand for the yen, leading to moderate appreciation over time. Moreover, right, if central banks in the US and UK begin to pause or cut rates while Japan continues to hike, interest rate differentials will narrow, reducing the advantage of holding dollar or pound. This would strengthen the yen's relative appeal. So in summary, Japan's long-awaited rate hike is a notable pivot in monetary policy, driven by rising wages and inflation. While this move sets a stage for a stronger yen in the medium term, investors should not expect a sharp or immediate appreciation. Okay, so there you have it. So these are the things that you really need to understand when it comes to the yen. And it also explains why we are not seeing a very strong yen appreciation happening so far. Everything that's happening is pretty gradual in nature. So if you have prices correcting, on the bigger time frame, prices coming down all the way, coming down, correcting, then take these opportunities to look for the sells, okay, in the dollar yen, right? So hopefully this sharing is able to help you with that. That's a report for today. Thank you.